Under One Roof MTL. Hosted by Robin Flynn. Featuring mortgage brokers Fred and Martin and real estate expert LJ Aguinaga. Presented by Fred and Martin Mortgages and LJ Realties.
Good afternoon, it's 12:05. This is Under One Roof MTL, where we are demystifying home ownership 1 week at a time. Today we're going to be joined by Mario Cloutier from Manulife. So if you have any questions about insurance, you can start texting them in now to 514-800. He'll be joining us in about 15 minutes from now, so you'll want to stay tuned for that. Good afternoon, gentlemen. Beautiful day today. Fred Pichette from Fred and Martin Mortgages. How are you?
Good afternoon, Robin. Very well.
LJ Aguinaga from LJ Realties. How are you?
I'm doing great. How are you?
I am great. Beautiful. Happy Tour de l'Île Day to everybody participating and closing down the city streets. It's one day a year, right, guys?
Yeah, it's a great event for this.
It's a great event.
Because Friday night was also affected. My buddy couldn't get home on Friday night. He had to leave his car at my house and then walk home from there because the
Tour de Nuit, right?
Which is part of it, right? So The Friday night definitely had an impact as well.
Oh, yeah, there is construction everywhere. You know what? It's beautiful. Roll down the window, turn up CJD, listen to us. We're with you till 1.
We're not going to start to complain. The downtown Montreal, I don't know if you've been lately, it's really disastrous, St. Catherine Street.
Enjoy what you can.
Exactly.
Enjoy what you can, guys. Let's kick things off with our trivia question of the week, coming off the trivia show. This is brought to you by Felix and Norton Cookies. You can visit their store at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. If you're the first person to correctly text in the answer to our question at 514-800, you'll receive delicious cookies from Felix and Norton delivered straight to your door in a couple weeks. They're not coming tomorrow. I know sometimes people win and they call me the next day and like, Robin, where are my cookies? I'm like, okay, relax. They're coming. I promise they're coming. Our question this week, if you think you know it, 514-800, please include your name. What is the word used to describe a property that generates income for the owner through rental payments? If you think you know the answer, you're not allowed to guess, Fred.
No, I think LJ will know this one, right?
He might. 514-800 if you think you know it. Guys, there's tons of stuff in the news this week. It's hard to even keep up. Every morning I wake up, Martin sends us an email with tons of news stories. It's really hard to stay on track of everything going on in housing right now. But one thing I wanted to chat about was Montreal says it's aiming to cut building permit wait times down. I know this is something that you've struggled with recently, LJ. Their goal is to cut it down to 4 months, which still seems really long to me. But is this feasible, you think?
4 months would be a dream. Honestly, having gone through it myself, it took us 3 years to get a permit. So you tell me 4 months, and I'd say no problem. We can do more development. We can build. It'd be so much more exciting. And even Luc Poirier, who's a huge Quebec developer, real estate mogul, doesn't believe it's going to be feasible in his lifetime.
His lifetime?
How
old is he?
Yeah,
maybe 50, late 40s, I think.
But the mayor plans say it'll be 4 months now. So very soon she says she's going to change the time for 4 months.
I would like to know how they plan to do this. Like, presumably they're going to have to hire more people, cut some red tape.
She said she's going to make one process for every borough, for every municipality, so that it's one same process across the board to supposedly make it easier and simpler.
That makes sense.
The problem is there are revisions and the fact that nobody in the city is working in on the same day. When we were going through this, we had submitted everything, and it's okay, obviously. Some things like, we changed this law, we changed that law, it doesn't meet these new requirements, and things change, and that's totally okay. But the problem is one person tells you yes, 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 and then that person goes on leave or on vacation or whatever, and then somebody else picks it up, and then they're like, oh no, that's all wrong, this has to be done. And then you have to speak to 3 different departments, but they're all working from home most of the time, so they're never in the office the same day, so they never get through these things. At the end, when the permit was almost ready, it took an additional 3 months for us to finally get it after going to the head of all departments of the borough that we were in, because it just didn't make any more sense to us. And even then, they're like, oh, please change this or send this to us again. Like, we sent this to you 6 months ago.
Oh, my goodness.
Yeah, but the question I would like to ask is, why does it take 3 years to be approved by the city? 3 years, seriously, it's
I think it's what LJ
long.
just described, right? It's like people aren't talking to each other.
This could be probably done in a year or less than a year. Any other city, I had a comparison, I did a little research, and I was looking at Vancouver. It says for Vancouver, for a simple building permit, it could take up to 8 weeks. And if it's a complex building project, the permit could take up to 8 months. which is reasonable. How come in Montreal it's 3 years?
I mean, you don't want to get me going on this subject.
Everything
No,
is more
but
complicated
that's-
here. It seems like in Quebec in general, not just for housing, there's just red tape across the board.
We just accept it. That's the problem. Every other
Yeah.
province, this doesn't work. That's why business is typically a lot more fruitful in a lot of the other provinces. That's why a lot of bigger developers have gone to their provinces. Even, for example, the group Rivia, who's built a ton of towers downtown recently in Montreal, is now building in Vancouver. Because it just makes more sense for them. Because there's less red tape, there's less things to deal with. And they've got some of the largest projects in downtown Montreal right now.
Well, you mentioned LG, Mr. Luc Poirier. He clearly said that now he's looking for Ottawa and even Toronto to build his next project.
And he's a Québécois.
Yeah.
Purebred, like this is what he wants to support Quebec as much as possible. He still lives here. He invests here as much as he can. But when it doesn't make sense, it doesn't make sense. And that's what keeps forcing our dollars to keep going to other provinces or other countries realistically. I mean, I took a couple meetings this week with a few developers in Florida and in Dubai who were pitching us these projects. And I'm like, how long is it going to take to get ready? And they're like, 2 years maximum from start to finish. And if there's delays, we have to pay the buyer due to our delays. There's
Right.
penalties in the back, whereas in Quebec,
Yeah.
it's understood there's always going to be delays, and it's 6 months to a year delay minimum, and there's no penalties for the buyer.
Right. Think about it. It takes 3 years to get the permit, but honestly, to build the project, it's what, 2 years approximately?
Depending on the
Depends
size,
on the size, but
8 months to 2 years, sure.
well,
So it's like 5 years from start to finish.
it makes no sense.
That's crazy.
Can you imagine?
Ugh, no, I can't. Guys, Justin Trudeau said something kind of interesting this week. I noticed,
time.
yeah, the Globe and Mail changed the headline. Did you notice that?
I did not.
When the article first came out, it had one headline, and then when I went back to it and refreshed it, they had changed the headline. I don't know if that was someone from the PMOs, gave them a call and were like, "You're making this look bad." But basically, Justin Trudeau was asked about home property values and how inaffordable it is for younger generations to buy their homes for the first time, how much money they need to be earning to get into a home for the first time. Can we devalue homes, basically, was what was being asked. And he said, no, homes need to retain their value because, to be honest, most boomers in Canada, that is their retirement plan. It's tied up in their home. That is how they plan to retire. And if home values drop, then you're going to have a lot of angry boomers who can't retire or have to change their plans. So, guys, I don't know if this is just me being a little bit biased because I'm a millennial, but it feels like we're, screwing over the millennials to save the boomers. It was one or the other, right? You devalue homes so millennials can get in and then boomers have to keep working, or you keep home values the same and then millennials can't buy them. I don't know. What's going on here?
Well, Robin, I'm sorry for Justin, but home will continue to increase in value because if interest rate falls, the demand will rise. And if the inventory is low, obviously price will increase, and that's for sure. Like maintain the value, that's for sure, but it's going to increase.
So we keep talking about building more properties, right? The big reason why prices keep going up because there's not enough supply, and we realize that there's not going to be enough supply until we build more homes. The other part of that coin is obviously immigration keeps going up, right? And it's great that we keep bringing in all sorts of foreigners into Canada, but if we keep increasing the size of the population and we're not building quick enough, we're obviously going to be putting a lot more pressure onto pricing, and it's just going to continue to go up in that sense. So although it's very nice that he said that he can't do, the house pricing, it's not like a stock. We can't just say, okay, we're going to do a stock split and it's going to be half the price now and everyone's going to be able to jump in again and it's going to be a lot more affordable. That's not how it works. There's so many external factors that we have to consider here and we really have to take into account. And again, unfortunately, I think it's just one more publicity stunt with the election coming up for next year more than anything. They're trying to save face one way or another. And while you're right that obviously the boomers are out here winning, there is no simple solution to this.
Of course
and
not.
The easiest solution was always, you should have bought a property 5-10 years ago. And then...
Okay, but tell that to someone who's 22.
That comes back to the memes of, what was I doing when I was in grade 2? I should have been, instead of sleeping and doing my homework, I should have been buying property. And
Exactly.
I get it, 100%. The flip side to this coin is the fact that the boomers are protected. If these people have a good relationship with their families, they should be able to get a helping hand. And obviously, we are becoming more and more reliant on that type of handout, if you will, in order to get into the market right now.
I would say most of my friends who own property, like a lot of my friends still rent because they can't save up to buy a house. The ones of like those of us who do own our own homes, we did so with gifts from our parents for the down payment. Yep. I think I know one person who actually saved up and bought their house without any support from their family.
Well, I see that all the time, to be quite honest, for the last 5 to 10 years, Yeah. Even though back then the interest rate were lower, still parents was chipping in to help their kids. And I think it's the right thing to do. Nowadays, with the high interest rate, even though it might go down on Wednesday, on the 6th,
that's a teaser. We're gonna get to
that.
that.
We'll have to talk to that. Up next, we are going to get to that. Our interest rates going to be going down this week. Plus, we're going to be joined by Mario Cloutier from Manulife.
Under One Roof MTL, hosted by Robin Flynn, featuring mortgage brokers Fred and Martin and real estate expert LJ Aguinaga. Presented by Fred and Martin Mortgages and LJ Realties.
This is your lingo lexicon on Under One Roof MTL. A co-borrower. A co-borrower on a mortgage in Quebec is an individual who signs the mortgage agreement alongside the primary borrower, sharing equal responsibility for repaying the loan. Both borrowers' incomes, credit scores, and financial profiles are considered by the lender when approving the mortgage. For example, let's say Margot and Stephanie decide to buy a house together in Montreal. They both sign the mortgage agreement as co-borrowers. This means that both their incomes and credit histories are used to secure the loan, and they are equally responsible for making the monthly mortgage payments. This has been your Lingo Lexicon on Under One Roof MTL.
It's 12:20. You're listening to Under One Roof MTL on CJD 800 with LJ, Fred, and Robin. We are with you until 1 p.m. There are so many different kinds of insurance. You can insure everything, and you should insure just about everything, whether it's your car, your home, your life. Absolutely everything requires insurance. And who better to speak to than someone who works in insurance, someone who works at Manulife. Mario Cloutier from Manulife is on the line right now. Hi, Mario. Thank you so much for being with us.
Good afternoon. Thanks for having me today.
Of course. So let's just dive right in because I want to make sure we can get as much in as we possibly can before 12:30. So what kind of insurance do homeowners particularly need? I mean, I'm sure everybody knows, okay, I need home insurance, but what do they need to protect themselves?
Yeah, for sure. Home insurance is usually mandatory and required by most of the financial institutions that will provide you a mortgage, and it's absolutely essential. Now, home insurance is going to cover any kind of damages to the property while you're in possession and the mortgage is still under force. Now, this is obviously the most common and well-known type of mortgage. You're also going to have, in some cases where your down payment is less than 20% of the mortgage, you're going to have what we call mortgage insurance, which is provided by three institutions in Canada, CMHC, Sage, and Canada Guarantee. And the purpose of those mortgages is to secure the loan on your behalf with the financial institution, so that if you were to default the mortgage at any given point, these institutions would step in and pay the mortgage on your behalf. Now the other ones is called creditor insurance. It's a little less well known, really well known amongst the mortgage broker industry, obviously. And this one, the purpose of this one is, should you have a situation, a life event, while you're undergoing the mortgage payments for the first 20, 25 years, the payment would be made to the financial institution on your behalf by the insurance company. So those are the three ones. Now, obviously, there's other similar products that are available. This one is the last one. Creditor insurance is called disability. You also have a life insurance that's available, creditor life insurance, as well as just a regular life insurance. A creditor life insurance will pay. Again, the mortgage, should there be a life event where you would pass away, the mortgage would be taken care of 100% by the creditor insurance company, so that your family can continue to live in this property and not have to worry about the mortgage payment. You can also have a life insurance where the payments will be made to you, but then your succession would still be liable for the payment of the mortgage until the mortgage is paid up in full. So I can appreciate how it can be confusing for the consumers to navigate through those different processes. The best thing to do is, obviously, when you enter a mortgage transaction, is to talk to your mortgage brokers about the different options that are available. They're best suited to give you the proper advice when it comes to that. And in some cases, they'll refer you to the financial advisors if you want to do some more lifelong planning. But the mortgage broker is definitely the first person to go to for those discussions.
Thank you, Mario. I have a question on that because on the topic of creditor insurance, a lot of time you have the banks who will offer you a creditor insurance at the same time when you're taking your mortgage. And then there's companies like yourself at Manulife who offer the same product but different. I'd love for you to be able to highlight for us what are the biggest differences between the two products and why yours is so much superior.
Yeah, that's a great question. Thank you for asking that. So the product offered by the financial institution serves a purpose. Obviously, if you get your mortgage with the green bank or the blue bank, they'll provide you with what they call their in-house product, which enables you to be protected if there was a situation during the time that you have that specific term of mortgage. Now, the flip side to that is in 5 years down the road, if you choose to change financial institution because after talking to your broker, he's found a better solution for you and you want to move that protection to another financial institution, then the protection would not be transferable, which means that if your health situation has changed, not for the best in the past 5 years, you would have to underwrite a new policy and go on through the new terms and potentially be more expensive, whereas the Manulife product is actually the only one in the industry that's transferable, portable, for the life cycle of your mortgage. So if you're with the blue bank today, it's good. If you're with the green bank tomorrow, you can transfer the coverage that you've had. And the payments will be underwritten and adjudicated at the time you take the insurance. So 5 years from now, you don't need to adjudicate your creditor insurance protection. You can still continue with the same payment. The other distinction with the financial institution that's not as commonly known is the underwriting is done at the time of the claim, whereas with Manulife, the underwriting is done upfront. So you exactly know what you can expect when you enter into the contract. Sometimes it avoids a bit of surprises, obviously, but it sometimes it makes the world of difference as well.
I'd also like you to elaborate a little bit more. My understanding is that typically with the banks, that product is a declining balance. So obviously, if you start off today with a $500,000 mortgage and you only need to use the insurance in, let's say, 10 years' time, and the balance is $400,000, that payment is actually $400,000. Whereas the product with an insurance company like yours, if you are approved for $500,000, regardless of when it happens, if it's on year 1 or year 24 of the mortgage, that payout remains the same.
Yep, your statement is correct. So that also enables you, talking about the portability of the mortgage in the past, that also enables you, obviously, as we know, the situation with our parents and our grandparents used to be you get a mortgage and you keep the mortgage for 25 years. Now, because of the many changes in the value of the properties over the last 2 decades, people sometimes go back to their mortgage to enter what we call a refinance in order for them to be able to take back some of the equity that they've acquired in the property. So having the opportunity to not have a declining balance actually enables them to keep the same coverage and just transfer over to the original amount that was good. So that's a very good question there.
Mario, I want to ask you, is there a particular times that you're better off transferring your mortgage protection plan with Manulife to a regular life insurance?
So that's another great question. I would argue that those serve two different purposes. So there's a concept in insurance that's called layering of risk. So a life insurance typically covers the long-term ahead planning and covers the maintaining the lifestyle that you've established for your property. So you want to be able to make sure that you have an income that's going to continue to support your lifestyle if there was to be a situation. With creditor is to take care of your liability. So I would argue, and most of financial advisors will tell you, that it's actually better to have the two products. And where we're going with the layering of risk here is obviously if you have one coverage at $1 million, most oftentimes the requirements from the insurance company will be higher. There can be a blood test. There could be a lot of things that happen. So you shouldn't put all your eggs in the same basket. The life insurance policy should be there to able to maintain the lifestyle afterwards, whereas the creditor insurance is going to cover your liability so that the income coming from the life insurance is absolutely free and clear. Now, don't forget, when you transfer from a creditor to a life, if you were to use that option, when you transfer onto a life option, the adjudication of the life option will be done at the time you do the transfer. So, there's a saying in financial advice that you should have taken an insurance 3 years ago. So obviously you lose kind of that benefit if you do the transfer after 5 or 10 years. So both products have their merit, but they serve a different purpose.
Mario Cloutier from Manulife, thank you so much for being here today. I love when we have guests on the show because that's when I learn stuff. So I appreciate it so much. Have a great day, Mario.
It was my pleasure. Thank you so much.
There he goes. You're listening to Under One Roof MTL on CJD 800.
Under One Roof MTL, hosted by Robin Flynn, featuring mortgage brokers Fred and Martin and real estate expert LJ Aguinaga. Presented by Fred and Martin Mortgages and LJ Realties. This is the Mortgage Minute.
Five tips on saving for a down payment. This is your Mortgage Minute. Set a realistic goal. Calculate the exact amount needed for your down payment based on the home price you're aiming for. Also consider closing costs and potential repairs. Create a dedicated savings plan. Open a high-yield savings account specifically for your down payment fund to earn more interest. Automate your savings. Set up automated transfers to your dedicated account each payday to ensure consistent saving without the temptation to spend. Reduce debt. Pay down high-interest debt to free up more money for savings and to improve your credit score, which can lead to better mortgage rates. Increase your income. Look for opportunities to earn extra income through side gigs, freelance work, or selling unused items. Use this additional income exclusively for your down payment savings. Follow these tips, and before you know it, you'll have your down payment.
Great advice from Martin Spalding from Fred and Martin Mortgages. You're listening to Under One Roof MTL. I am Robin Flynn in studio with Fred Pichette from Fred and Martin, LJ Aguinaga of LJ Realties. Guys, we had a great teaser like 20 minutes ago. Everybody is in suspense, waiting at the edge of their chairs, and we have to talk about it. The next interest rate announcement from the Bank of Canada is this week. Now, Fred, you've been saying for a while that you thought June would be the first rate cut. Experts seem really split on what's going to happen. The one after this isn't until the end of July. What do we think is going to happen?
And my friend LJ says at the end of July too. I'm
Right.
probably the only one who says June 5th, but I'm really optimistic. But I think Bank of Canada, a lot of economists says that it should be June 5th or June 24th. It's really the way you see it, But I think our first rate cut will really arrive this week by 25 basis points.
Ooh, that is exciting news.
That's very exciting news. I don't believe it.
That's
It
good.
would be very, very exciting news.
I mean, we're all going to owe Fred a cup of coffee if he's right. And
Right.
interest rates come down this
Exactly.
week, right?
Well, he said 100 basis points by the end of the year. That's his true bet.
Right. That's still a bit of a long shot because how many announcements do they have left between now and the end of 2024?
5 announcements, including this one this week.
So if they drop by 25 basis points, that means 4 out of 5 we're going to see a decrease.
Right, but I think we're going there. But okay, obviously it could be 0.75, but my bet, I'll keep my bet at 1%.
Well, it could be. It could be. Of course it could.
Anything could happen.
Yeah.
But yeah, and we worked it out. I believe, LJ, we were talking off air that if you have like a $400,000 mortgage, that probably equates to like an extra $60 a month in your pocket. So
Ballpark, yeah.
it's not a ton of money, but even though it's not a ton of money, we're expecting to see an increase in the real estate market because of this rate drop, right?
So what we've been seeing so far this year is the fact that because interest rates have been stable, there's been higher consumer confidence, right? And the fact that everyone keeps saying that they're going to come down has brought more people into the market as well. The fact that obviously some people have taken a 2-year hiatus waiting for these rates to come back down a little bit. The fact that we're finally seeing kind of the light at the end of the tunnel, if you will, is going to encourage more and more people. And even though these changes aren't significant, we've seen the 5-year fixed rate come down. I mean, I got a rate update from Fred Martin this week, and I saw the rates across the board, and I was surprised. The last rates that I had were still about 15 to 20 basis points higher than what we were quoted this week. So even on the fixed rates, we're seeing them come down, which is a good indication that possibly the variable will come down with the next one, obviously, and it'll just become more and more affordable to get into the private properties. But obviously, as you'd mentioned before, as interest rates come down, prices are going to go up. So net, we're going to end up paying the same thing, but we'll be able to afford more expensive homes.
At least it's going into your home as opposed to the bank. You're spending the money anyway, right?
Well, I think you had a chance to save a bit more money because you're paying it for the last, I think it's 3 years almost. We got how many increases,
Yeah.
People pay much more money towards the interest than they should.
4 years since we saw a decrease.
Exactly.
Oh, my goodness.
Yeah.
Well, you know
it's
what?
about time. That's why I'm betting on June 5th. But
Yep. We have a great text here that I think is really relevant to this discussion, guys. It says, "Hi, Robin and team. We are starting our 3rd year in our home on a 5-year fixed mortgage. So if we do the math on that, that means she signed in 2021 when interest rates were quite low. We are already getting notices from the bank saying that our mortgage will renew with an increase of about 45% due to the interest rates. I was thinking we should take a variable mortgage next time around." Right away, that's
great decision.
Yeah, I see Fred
say.
nodding. Yep. What is the minimum amount of time we should wait before switching to a variable mortgage? Is this the right way to go? Should we wait until our 5 years are up and hope for the best? What should we do?
I think, Robin, she should, our listeners should wait until the end of their term. The first reason is if she break her mortgage right now, she's going to be hit by a potential high penalty. Depends of the mortgage balance that she carry. But again, there's no rush right now because she probably, as you say, had a good fixed rate 3 years ago. Mm-hmm. And I think in 2 years from now, it'll be a very good timing for her to look at her option. And obviously, variable rate, except of the last 3-4 years, have been the best option.
Right.
Always overperformed the fixed rate.
Okay.
And also, it'll give you a bit of flexibility. I know a lot of people that maybe listening right now would say, "Hey, Fred, it's not that it happened the last 2 years." Obviously, it went up by a lot.
It's only been the last 2 years, right? I remember I signed my variable rate December 2021, so at the very end of 2021, and I think back then, Prime was still at 245. We were getting the discount, so it really has only been a 24-month period right now, and as it starts to come down, it might be when all is said and done a total of 3 years, but it wasn't that long. It just felt like really long because it's the highest we've seen it in a long time, and I think almost 4 decades.
And it was stressful at the time because the way the Bank of Canada makes these announcements is not like every 3 months. The schedule is a little wonky, right? You go sometimes with 2 really close and then none for a little while. So it felt very unpredictable. And it was like by the time I got a notice from my lender telling me like, "Yeah, we've adjusted your mortgage," then I was getting another one telling me, "Yep, we're adjusting your mortgage again." It was a really stressful period. But think how nice it's going to be when you start getting letters from your lender saying, "We've adjusted your mortgage down." That's
Can't
exciting.
wait.
Oh, that's going to be so much fun. Guys, we have another question here. Let's see if I can find it. Somebody was asking, what is the best mortgage to get when your loan is less than 60 grand?
Sadly, a lot of bank will ask for a minimum mortgage of $50,000 to $75,000. I would say in this case, maybe keep up with your mortgage. Try to negotiate a better rate. If you don't need to have access to your equity, maybe you could try to get a lower amortization period of doing extra lump sum payment. That's probably the best way to get rid of that $60,000 mortgage.
Okay. You mentioned a little bit earlier, Fred, that there are penalties if you want to convert from a fixed to a variable. Does it work the other way around as well if you want to convert from a variable to a fixed right now?
Yeah, you could convert from variable to a fixed rate, but at this point, we're at the end of the storm.
Right.
Why would you do that? Because potentially, as I said, that we might have up to 100 points down in the next few months. Again, if it's the case at the moment, I will say hold on to your variable. But obviously, if it's getting, you're too nervous about it and it's costing you too much money, you could convert it to a fixed rate. But don't get me wrong, banks and lender will not give you a very, very good rate to convert from a variable to a fixed.
Okay. What is the 5-year fixed rate at right now? Somebody just texted that in asking.
It depends. If it's an insured mortgage,
Yep.
I see as low this week for one of our clients, as low as $469 fixed,
Okay.
5 years. up to $499. I would say for an insured mortgage. When I mean insured mortgage, it's a mortgage with the premium with a down payment less than 20%. We call that a CMHC mortgage or a Sagen mortgage, and the interest rate is actually better because we're tagging the premium to the mortgage.
Okay, that makes a lot of sense. Coming up next, we are going to have the answer to our trivia question of the week, plus what we learned this week, and my absolute favorite part of the show, our property of the week.
Under One Roof MTL, hosted by Robin Flynn, featuring mortgage brokers Fred and Martin and real estate expert LJ Aguinaga. Presented by Fred and Martin Mortgages and LJ Realties.
This is Under One Roof MTL on CJD 800. LJ, Fred, and Robin with you until 1 p.m. We have the answer to our trivia question of the week, brought to you by Felix and Norton Cookies. Stephanie in Pierrefall was the first person to correctly guess. What is the word used to describe a property that generates income for the owner through rental payments? Income property or revenue of property, whichever, are both acceptable. But Stephanie was first, so she is going to be receiving some delicious cookies in the next few weeks. Guys, our property of the week. This is my favorite part of the show because as soon as it wraps up, I go straight online to go lurk and look at all the pictures. I love seeing what property LJ is going to recommend for us.
Today, I'm going to be highlighting 3805 Boulevard Saint-Elzéar West in Chambéry-Laval. This split-level home was built in 2006 and was the Maison Enfant Soleil for that year. The owner of the home actually won it as the raffle prize for the prize in that year. The home features 3 bedrooms, 1+1 bathrooms, with the plumbing to add another bathroom in the basement if you'd like, a fully finished basement, a garage, and a spacious yard. You'll also appreciate the proximity to Carrefour Laval and all amenities. Stop by our open house today from 2 to 4 p.m. My favorite place to eat in the area would have to be my in-laws' house. However, for the general public, I suggest you stop by Elixir, the Canadian version of the Cheesecake Factory.
I can't just go to your in-laws and...
I mean, Robin, you can come with me. I'm happy to go.
Amazing. Sounds good. Elixir is a great place. There's a spot in the West Island too, right?
Exactly.
They have great cheesecake.
They do have a great cheesecake.
Yeah,
they have a great everything, to be honest.
It's one of these 16-page menus, though, right? So it's got something for everybody.
I love that. Love that. Guys, what did we learn this week? As usual, we learned a ton. I learned so much doing this show every week. We learned that you need to layer your insurance products. Special thanks to Mario Cloutier from Manulife for joining us, from Manulife. Your home insurance, your life insurance. There are so many different products available to you. And you should always speak with your mortgage broker because they can refer you in the right direction. They'll refer you either to Manulife or another insurance company. They'll refer you to a financial advisor. Your mortgage broker is the best person to talk to about this stuff.
Absolutely, Robin. And I like to offer to my client that Manulife product. Mm-hmm. When you purchase a property with 5% down payment, you have a high debt, and it's a cheaper way to protect your asset. And it's a good product that you could transfer, as Mario said, from one property to another. It's pretty good.
You can get some good bang for your buck there. We also learned the Bank of Canada has an announcement this week, June 5th. Today's the 2nd. It's in 3 days, guys. Fred still thinks we're going to see a rate cut of 25 basis points this week. LJ thinks not till the end of July at the next announcement. It's a duel, and we will find out who comes on top next week on Under One Roof. I also learned this week, guys, that building permit wait times in Montreal are insanely high. That what you went through, LJ, 3 years to get a building permit is not an anomaly. That is pretty much the norm. Somehow the mayor says they're going to cut wait times down to 4 months. I mean, that seems like a very, very lofty goal.
I do not believe anything she says.
I mean, they're probably not alone in that.
I gotta agree. 3 years to 4 months. It's a huge gap.
There should have been like a 5-year plan. We're going to cut it down to 2, 1, 6, some sort of plan and show your work, right, guys? Like, I want to see how this is going to happen. Are you hiring more people, cutting red tape?
My people are going to take care of it. Don't worry about it.
Yeah.
That's all there is to it.
Excellent. Good to know.
We'll see.
We're almost at the end of the show. We do have one more text that let's try and squeeze this one in, actually. John texts in at 514-800. He is up for renewal in 3 months. He still owes $400,000. He's on a variable rate, trying to decide if he should go with variable versus fixed when he renews. Should he stick with his same lender or go see a broker to shop around?
John, I would if possible, and you could tolerate the risk, I would try to keep on my variable because I think the rainy days are gone, and potentially you can make good saving for the next 5 years. And obviously in 3 months, I don't think we're going to have the best fixed rate of the moment, which is going variable for another 5 years. We could always convert it afterwards when you find your sweet spot that the fixed rate is low enough for you to lock it up for another 5 years, which is at this point I will try to keep with my variable, John.
And do you think he should stick with the same lender, or should he come see Fred and Martin and see if he can shop around?
It's really up to him, but obviously we have access to 22 different lenders, which could be a good thing. If you give us a call, we could really help.
Yeah, that's the advantage of going to a mortgage broker, is they just have access to information that the regular people don't, right? Do you know how much time it would take you to call up 22 different lenders to figure out what's the best option for you?
And it's not only sometimes only about the rates. It's about the loan condition, where you're at in your life, what your goals are. You want to purchase another property, you want to do leverage. It's all those questions we answer all the time to our client. And most of the time they say, I didn't think about it. Well, it's the right time to review your option when your mortgage comes to maturity.
Yep. It also forces you to take things seriously. I feel like if you're just casually looking yourself, maybe you're not putting in all the effort that you could be putting into when you've got an appointment on the books with Fred Pichette. I mean, you're going to take it seriously. You're going to get all your documents in order. And then you're going to walk down the hall and you're going to go see LJ and start looking at properties, because everything on Centris already has 12 offers in. LJ can find you a property and he can find you one that doesn't necessarily have a million offers on it, right? I mean, 100%. I hope so.
100%.
Yeah, that was an experience that I had. I thought I was going to find my own house on Centris, and my real estate agent at the time was like, no, that's not really. It's nice to look. It gives you an idea of what you're looking for, but let the expert handle it. You guys are doing this for a reason, right? Guys, that's pretty much it for us this week. A reminder that Under One Roof MTL can be heard live every Sunday at noon right here on CJD 800. To learn more about us and the show, you can visit our website, underoneroofmtl.com. You can send us questions, reach out to us directly. If you want to get in touch with LJ or Fred or Martin, what's the best way to do that? I know, Fred, for you, everybody just goes to fredmartin.com, right?
Yeah, we keep it simple, fredandmartin.com. If you're looking to be pre-approved, refinancing, or renewing your mortgage, get an appointment with us. It's worth it.
Excellent. LJ, how can people get in touch with you?
For real estate, you can check out our website, ljrealties.com. You can also find me on Instagram, YouTube, TikTok, Facebook, and X, formerly Twitter. My handle is LJ Aguinaga, Aguinaga. Or for more information on our listings and real estate team, under the handle LJ Realties. We are looking for motivated, dynamic realtors to join our team. So if you're in the industry or wanting to break into the industry and you're looking for mentorship, accountability, and just a fun, dynamic team to hang out with, reach out to us. You can also call or text me at 514-500-4040, or for any property management services, reach out as well. We'd love to take care of your properties for you.
I love that people can text you. That gives me such joy. I choose people that I can deal with via text, that I don't have to call. If there's a clinic and they're like, there's an option to make an appointment online, I am choosing that option every single time. I don't know what it is. I'm a millennial and I don't like making phone calls. If you're looking for someone to help you out with your social media or produce your podcast, you can give me a call. Just go to my website, robinflynn.com. Tell me what you want to do, and I can probably help you out with that. If you missed anything, this show in its entirety will be available on iHeartRadio, Spotify, Apple, wherever you get your podcasts. For LJ, Fred, and Martin, I'm Robin Flynn. This has been Under One Roof MTL.